What's up, everyone? How's it going? Welcome to today's trade recap and market analysis segment. Today is the 10th of January, but this recap is supposed to be for the 9th. I was really busy yesterday with a variety of different work, but we're back into it today, and it's probably going to be one of two videos that we upload today, so there's that. Essentially, yesterday we took two trades. We lost on one of them and we won on one of them. Second one was pretty clean. The first one we did get stopped out, and honestly, like this week, how it's looking is that the areas in which we enter seem to be those reversal points where price just happens to shift right away. And there has to be a reason behind all of this. So my other video, which I'm gonna upload today, which is gonna be the weekly recap, we're gonna go over all of that and see potentially what we've been doing wrong. We may be simply analyzing order flow wrong simply because it's been a while since we've done this, but I mean, it might take a while to get back into things. And as you see, we're having a face cam on these videos now. Why? Honestly, it's because it gets more views on YouTube and simply better to build a personal brand anyways. So there's that. So I mean, let's get straight into this. So the news we had yesterday was nothing really significant. We had NFP, of course, which is always going to be a big news event. And if you take a look at what happened at 7:30, which is right here, it looks like we flushed towards the upside and we put this high in. So let's just place that high right there just for visual purposes, right? Because of course that's going to be a key area of potential liquidity that the market may want to capture. And we do happen to go ahead and tap that later in the day, as you see. But before we do that, we do head lower. And at 9 a.m., where was it? 9 a.m. when we had these University of Michigan news, which again looked to be pretty positive, that's when we saw that big shift towards the upside, in which we went to that key 7,000 psychological level, where we finally retraced once again. And what did we do? I mean, we got cooked at that retracement level, but essentially we hopped on the market quite late yesterday as well. I mean, it's gonna happen. I mean, we're adjusting to not only waking up early once again, because I'm not gonna lie, in winter break we've been waking up hella late around 9 a.m., which is not optimal. Now we're waking up more around that 8, 7:30, 8 a.m., in which we'll get ready by around 9. But all things said, we gotta be waking up by 7 and getting ready by that time when the market opens around 8:30, so that we're actually prepared for all that the market has to offer. So with that said, I mean, there's not much to say. I mean, let's just get straight into it, analyze right from the market start to 10:30, see if there's anything, and see if we can analyze this trade as well, see what's going on. And then later today we'll analyze all the different trades we've taken this week and see if we can find out why price did what it did and potentially what we did wrong that made us keep getting these literally the point of reversal trades, but on the opposite side. So, uh, so yeah, I mean, let's get straight into it. So, look at straight at 9:30 or 9:30 EST, 8:30 Central. Looks like price is not moving anywhere crazy right upon market open. I mean, that market open candle itself, a lot of volume, but we didn't really get anywhere. Looks like we're starting to head higher. We look to take out the liquidity. The issue with this week really was that I'm thinking straight on the top of my mind is that we've been seeing these targets show up, but none of the targets are really crazily significant, right? They're showing up as targets, but these targets aren't providing any value to us because the liquidity that's surrounding us is almost the same size as the targets. Instead, what's been working this week is actually using the volume profile and doing more mean mean reversion type plays and simply going and predicting that price will go to areas where lots of volume is being transacted. So I mean, at this point, it does look like we're gonna break through that 6990 region. That's what I would think, right? But I mean, just take a look at here. We don't even get to that region. We start dumping. I mean, lots of big buyers entering in here, but we dump down. Potentially trapped buyers at that region, but I'm trying to see what is going on. And I mean, let's just take a look. I mean, we're hovering around this region, right around this 6990 region, and it looks like liquidity is pushing itself downwards, and we see this quick flush of sellers come in, right? That does seem to be pretty significant. I don't think there was any news around what 8:38. There was no news at that time, but we do see a quick flush in selling. But it looks like the bottom back up. Yeah, it does. Aha. I mean, nothing really is leading me towards the side of shorts, but shorts is what occurs. I mean, at this point, what are we seeing, right? We went up to this region. Sellers were unable to hold this region. I mean, buyers were unable to hold this region, and we saw a quick flush of sellers after seller urgency with this order flow liquidity, and then we flushed down. Now we've retraced back up, in which sellers are showing more urgency at this region, in which is 114 sellers at that region. Potentially, if sellers hold this region, right, and if buyers are unable to push through that region, if there's adequate buyer absorption at the area, then potentially it could be an area where price may want to flush down towards the downside, potentially to that 6968 region, 6970 region, or more preferably in these types of conditions, the high volume node at 6972.5. And that is if we don't generate a lot of volume around this region. So that's honestly what I'm looking for, what I'm seeing. But let's just take a look, right? Because right now it looks like sellers are coming in. So let's just see. I'm going to fast forward here. See if price dumps a little bit, or if that area holds. I mean, it looks to be holding. I mean, let's just say we enter into this trade, right? I don't know if it will work out or anything. I mean, we can predict that it's going to work out simply by looking at this footprint chart. But let's say we entered, and what would be our confluences for this trade? 1, we're deviated from the high volume node of the day so far. 2, by this point, 8:30. Okay. First, we're deviated from the high volume node and VWAP for the day. Second, we've attempted to take out this 6990 liquidity up top, and we're unable to, and we've actually been seeing seller urgency here that potentially, and a flush here, and we've seen continued seller urgency, which is actually holding around this region, and sellers are coming in stronger and stronger. Now, one thing that does kind of lead me away from this trade is simply the fact that we have so many buyer icebergs here, 1019, which is a lot of buyer icebergs. But again, in a discretionary trading strategy, sometimes you have to apply discretion. But okay, that's the thing with these discretionary trading strategies, right? A lot of the thing is due to lots of years of experience within the markets. And I mean, within a quantitative strategy or systematic, if there's a condition like this, the trade simply wouldn't execute. But sometimes looking at the context within it in a discretionary basis, there could be enough evidence that we may head lower. That's why, I mean, there's two sides of the equations. Using data to make your thesis and trades, or using your discretion over your years of experience. And I mean, that's what we're attempting to do, discretionary. But one advantage of using Orderflow is that we do get some sort of objective metrics, whether that be through some sort of absorption to identify weakness or strength, icebergs potentially to identify hidden orders, point of control to identify where volume is occurring, where this is all essentially just microeconomic, macroeconomic context that we're using, which is quite objective. But getting back on track, let's just assume we took a trade here, which, I mean, we didn't do that. We were not on the charts yet. Hold on. We're saying we're entering at 6983.75, 6983.75, 6983.75 at this candle, 6983.75, which, man, I mean, that looks like a pretty good entry to me, I'm not gonna lie. And 6985 seems to be that region, right? So 6985, we're gonna place it 0.5. I mean, 7 ticks, but look, I mean, we would have gotten stopped out if we played just according to those conditions, right? 7 ticks, we got stopped out by 3 ticks, right? But I mean, this is quite strict for us to work with, right? We're seeing this. So potentially you may want to simply keep it at the high of the last candle, because keeping it 7 ticks to target, what are we targeting? Until VWAP, right? Or until 72.5. So 7.3. We're targeting 43 ticks, but our stop loss is only 7 ticks. That is insane risk to reward, right? And I mean, it's crazy that it almost worked out. It didn't work out by 3 ticks, but I mean, typically our stop losses range anywhere from 15 to even 20 ticks, right? So, I mean, all things said, in a systematic strategy, you may place it around 7 ticks, right? Why? We're keeping it 2 ticks above this liquidity just to avoid edging out that liquidity, right? But say we kept it at 6987.5, so it'd be 6989. That's 20 ticks, approximately 21 ticks. Then you see how this is much more of a reasonable trade and actually allows a room for our trade to play out. And even placing it at these highs would work out as well. 87.25. I mean, ideally we would place it at right there. So there's two ways this trade could have worked out. We either would have got stopped out because we placed it just 2 ticks above this barrier, or we would have allowed it more room simply because our risk to reward ratio is atrocious, right? And I mean, in a good way, 6.1 for risk to reward is phenomenal. Don't get that wrong. The max risk to reward we really could have had is 3.91 without failing. But realistically, if our risk to reward is so high, and typically our risk to reward ratio within our trading journal is not that high, and what's working for us is not that high, that should signal red flags in our mind that we might be too tight on our stop loss. And if we're continuing to see this buyer, the seller urgency, potentially we just want to keep it around that region. So right around 6989. Oh shoot, I'm saying that wrong. It would be at 80. Yeah, it would be at 88 simply because 87.5, 2 ticks above. Yeah, 888. So I mean, our risk to reward would still be quite crazy. It would be 2.53, which is really good. So I mean, this trade right here that we're seeing is a really solid trade, if I would say so myself. Again, not to make it too long and not to repeat myself so much. Hold on real quick. I gotta adjust my volume. Advanced audio properties. There we go. Hopefully that's a bit better. Alright. Bet, 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 bet. Okay, our confluences deviated from our high volume node, and VWAP came up to the 6990 level, but were unable to push through. It could be argued that there's buyer absorption at that region, but more importantly, we've been seeing seller absorption at that, not seller absorption, pardon me, seller urgency at that region, and a seller flush at that region, which we're seeing further seller urgency, which is really bearish. And with that, in confluence with us being so deviated to the high volume node, in which there's not much liquidity at all preventing us from going there, right? I mean, if we see this type of flush and we continue to head down, it should technically be pretty easy for us to head all the way down there, potentially even all the way down there to, no pun intended, 67.5. It should be pretty easy to head down there. The only thing that's kind of drifting us away is this icebergs, but again, putting it under lots of discretion. I mean, let's just take a look at how this looked. Aha, I mean, look at that. Fast forwarding here a little bit. I mean, we see lots of buyers enter in there, and now it doesn't look so good for our trade. And we do head up to that upper region, and that's where we start to dip. And now I can't even lie, it's kind of scary because we're between two levels, the lower region and the upper region. We're just betting that we're gonna head to the high volume node. Aha, here. This right here might be an even more optimal entry. The last one we had an opposing factor, and our barrier supporting us was quite thin, right? There wasn't stacked liquidity per se. But here, we break out of this lower region, we have buyer absorption, and at that buyer absorption region, we have seller urgency. So this right here is a really good, really good signal right here. And at that 45 candle, so it'd be at this candle, right? 82.5. Oh wow. Our entry would be around 80.5, stop loss 83. I'm gonna head into the 1 minute there actually and see how this would have looked. And that would be the 43.59. To be right really close here. Yeah, I mean, it would not have worked out. Wait a minute. It would have worked out, pardon me. The 2 stop loss is 10 ticks. It's okay. And take profit again. Nah, this would not have worked out. 4.75. There's no potentially. I mean, this is a good signal for an entry for sure. That's a given. The only thing is that we saw this retracement here on the 1 minute that could lean us towards the other side. And that's why 1 minute and these really small sort of plays can be quite difficult to have really precise entries. So honestly, that would not have worked. Simply because we did see that retracement. But this is a good signal to entry, to make a short entry. Yeah, I mean, we did see that flush occur right away. Aha, now that's where that liquidity moves up, and now that's where it disappears. Yeah. So it does make sense. We're filling in that buyer delta region. And then we drop down to the high volume node. I mean, under optimal discretion, it would have worked out. But again, we're we're literally hoping not to keep our stop too tight. I mean, in all optimal conditions, if we kept our stop at a minimum at 15 ticks, everything that we would have done would have played out. Yeah, yeah. Everything, literally everything that we would have done would have played out. Yeah. So I think that's the thing. Don't keep our stops too tight there, and it would have worked out. Damn, this video is already 20 minutes. And now here at this point, liquidity looks to be quite bare. It's a Friday, first week of January. It's typical. Participants exit pretty quickly. Uh, okay. I think, wait. Liquidity is quite bare again. Now we have the UOM, so skip 5 minutes. Alright. Let's see what's going on here. I'm not seeing much because again, liquidity seems to be quite bare. We have that 9.6 level. I mean, we continue to flush until we take out that 960 level. So I'm trying to see if there's any potential shorts that could have been taken there. Not really seeing much for the potentially there, but typically those things. Let's see. Yeah, I mean, I don't really see any shorts that we could have taken. I mean, we put a really big delta there. I mean, not delta, really big seller there. 2,000 bid. It's insane. 2,000 bid is crazy. How low do we head? To 5.5. Yeah, I mean, looks like we will take that. Yeah, I mean, we put a big buyer. Yeah, that's this right here. The thing is, we gotta think of things this way as well, right? When there's lots of orders, sell orders, it allows for big buys to enter in at a specific price. Now, when those big buys start to get absorbed, that's when the selling starts to continue. But we also have to think of it in this way, right? If you're an institution, you want to get your entries all at the same price or at the best price you can. And you'll find those entries when there's either a lot of volume or a lot of liquidity in which you can enter. Here at this point, there's a lot of liquidity in which this institution could have entered. I mean, 1,500 contracts nearly is quite significant. So we know that an institution is entering 1,500 contracts with aggressive order. Or it could be the other way around as well. 1,000, an institution might be selling 1,400 contracts or short selling it. And that's why we have to watch this region very carefully. And we're pushing up at this point. There we have some selling liquidity, but we have this really big buying delta put into place there. I mean, the liquidity is quite bare. It's not very easy to read. And I hope some things change next week, but honestly, I'm still gonna be very careful. Like, I know I said I'm gonna head into live funded evals next week, but I might need next week as well to adjust. I can't lie. And I mean, we have time. We shouldn't rush things for sure, but we just have to see how to get back on track. Like next week, if we do pretty good, that's when we should start heading into these funded evals. But right now, I don't think I'm completely ready quite yet. There's big buys coming in here at 920. Is there any signal of these longs? I mean, look, it's just clear, crazy buying pressure. Let's just see. Yeah, I'm honestly taking too long in this video. What are they trying to show? Let's listen to what he's trying to say. Hold on.
Taken out absorbed right here on NQ.
Hold on. I'm trying to hear what this guy's saying.
See these sellers get taken out and absorbed right here on NQ, over here in ES. Got the same thing showing up, so that's a good sign. I like to see that. Let's see if it pushes through. I'll keep an eye on our. Where's that? I'll keep an eye on our market pulse. Indicators, see if they stay green.
Okay, I didn't get what you said. I can't lie, but we do see crazy flush here. Just pushing through all this liquidity. And then we had this crazy spread. No, nothing that we can really take there. Yeah, I mean, still nothing. Now here, there might be some opportunity. Which here at this point, it's what, 10, 9:30. Hey, here's where we see these absorbed buyers up here. We came up to the 7,000 psychological level. We're seeing buyers getting absorbed at 34 near the end here. Buyers are getting absorbed. The 7,000 region is holding really strong. Seeing seller absorption, we can't get back above that. Lots of sellers entering in. Potentially some sell orders could be feasible at this region until we head until this 8.5 region, potentially maybe even lower until the high volume node, but very deviated from the high volume node. We're struggling to break through this 7,000 psychological level. We are seeing bar absorption with this footprint chart, and you can see that through both the delta and the big trades indicator. And we're starting to see selling come in, and you potentially could get an entry at 96.5. So let's just hypothetically say we do that. But again, if we take a look at it, would we really want to short after all this big buying pressure? Maybe not. We might just be saying this in hindsight, and that's the thing I really want to avoid. Now at this point, a stop loss around 7,000 would be reasonable. So 16 tick stop. And target, let's just say we put it at 8.5. So 44 ticks. I mean, this trade right here, very, very, very solid trade, and it would have worked out. And I mean, taking a look at it, it looks like a lot of reversal models are working a lot better so far this year than retracement models. And I mean, retracement models aren't really showing up that well as well. I mean, yeah, we just start to flush down pretty heavily. So, I mean, good reasoning there. 8.5 does seem to be a really good target. I'm proud I placed that as a target because 8.5 is that liquidity region. So yeah, I mean, it's a pretty good target. It does look like we head down until 8.0, that high volume node in VWAP region. But sticking with our rules, placing out liquidity, and we do see that that liquidity did place some sort of impact. We did flush through it pretty significantly, and high volume node in VWAP is where we retrace again back to 7,000 region. Now here, as you can see, I did enter short. Now you may be wondering why. I mean, let's take a look. I said retrace it to VWAP an overall bullish structure on both NQ and ES. That's pretty true, right? It's a good reverse retracement area. If sellers hold this area, we may head lower, for sure. Left huge buyer imbalance at lows, so market may want to fill that imbalance. And yeah, that buyer thing that we're talking about is this delta right here. And I'll show you guys on here as well. Really big buying delta that's left unfilled. Now, what we were thinking is that if sellers hold around this region, potentially we're going to head lower and actually fill in that crazy delta that we put in down there, down here. But what we saw essentially was that sellers were holding that region. But one thing we failed to consider was that although sellers were holding this region, there wasn't that much buyers getting absorbed in that region, and there wasn't much volume as well, right? We went from a 30K volume to a 16K volume, and we're using that to place a continuation for more shorts. But in reality, what we're seeing is that aggressive sellers are getting down in here, but sellers are struggling to break these lows, right? And as a result, we may actually head higher. So I think that's where we comprehended this wrong, and it would have been one of those areas that we may have wanted to wait. We did say that this is a good retracement area, a very good value area for sure for these buys. But simply, we thought that sellers rejected this area, so we'd head lower, just simply because there was that crazy delta imbalance that may want to get potentially filled, right? Bit wide of a trade, but not unfavorable. With that being said, our main but only viable bookmap related target is above 7,000 in key psychological level, but I'm not thinking price will head there simply because we already tapped and rejected hard. I mean, that could be feasible, but honestly, I can't lie. This first trade, we simply comprehended this wrong. We either should have waited or seen something for better confirmation, right? Because look at all of these aggressive sellers that we're seeing there. That is a good area for sellers to reject, but are we seeing aggressive sellers enter in there, or are we simply seeing the lack of buyers? We're seeing a lack of buyers, but we're not seeing any aggressive sellers entering as well. We're seeing aggressive sellers entering near these lows here, but they're unable to break through the low of the last candle. And there's no seller urgency per se as well. Yeah, barely any seller urgency. And like, there's no target except for up here. And I mean now, at this point, 57 candle, so in this candle, we're moving up and we're seeing buyer urgency, right? We're seeing 171 buyers support us. So potentially, an opposing trade could be that if we break this region and break this region here with these absorption regions, I mean, this aggressive selling region, we may head higher. And I mean, looks like a trade of that aspect would have been shown here because it looks like we did see some sort of seller absorption here. Big sellers came in there. More buyers supporting that region. Buyer urgency for sure. And here we see that flush up. Um, let's take a look. I mean, okay, what do we see here so far? One to view up, what 8.5. So we're in this region, so we're still watching carefully. 8.7.5. We came to this region, so we broke out of that region. We've left all the sellers. We've left all these sellers absorbed. And now we have lots of room to head higher. So I mean, where did we enter? We entered at 990. And our OG stop was there at 84.5. So right under this seller absorption. 1.5 risk to reward trade, pretty solid. We barely went into drawdown there. Potentially we could have got an entry a bit lower. 8 to 8 to make it a 3 risk to reward trade with a 14 tick stop, which would have been pretty, really good. But our stop loss would likely not be at 8.4. We would likely place our stop loss much lower. So what we did here, let's just read what we said. We said, got invalidated of the old trade for sure. Now entering long, hoping we push up into main liquidity above, seeing as we had seller absorption and barriers that could protect our downside. We broke through our value area, so I want to see us flush into the 7K area. Had some opposing liquidity pull up to us near our entry, which was scary, but it looks like we're continuing. Here. Okay. 8.5 region, yeah. So I mean, here is where we got our entry. Right at 9.0. So we had a pretty good entry in this signal, right? Why? We had this chunk of buyer liquidity that could protect our upside. Absorbed sellers confirming that flush towards the upside. Now, at this point, I think it's a really high probability that we're gonna head to that 7,000 region, take it out before we head lower to this high volume node. Why? I mean, we were there at the high volume node. We were transacting, but sellers were unable to push through, and buyers started coming in very strongly. Now, buyers are continuing to show that urgency, and I mean, one more thing, now these buyer icebergs are even stronger than before, and our CVD is also very positive. So it's really solid and a good idea that we're going to hold this 8.5 region, a bit above it, of course, so that 4.5.5 approximately, right? And it's likely that we're going to hold it. And right as we start flushing through that region is when we can move our stop break even. And I mean, we flushed through that entire region, took our take profit, and there's that. We got profited. And by this point, our session is over. So, I mean, that's essentially this entire session we went through. I treat this more like a mix of a trade recap and educational session because not only do I want to learn on the mistakes that I've made, potentially you guys can learn a thing or two from what I'm learning as well, and hopefully we can set ourselves up for the next week as well. Later today, hopefully today evening or so, we're going to make another video analyzing our entire week, seeing if there's anything really that we can, seeing if there's anything more that we can analyze that we've been seeing that we're doing wrong, and write down on a Google document or whiteboard the things that we've been doing wrong, the things that we've been doing right, and make it a nice educational session for not only myself but also you guys. And yeah, I mean, if you have any questions, feel free to leave a comment down below or join the completely free Discord server, which is linked in the description down below. Lots of good resources, which are all free in that community. Furthermore, if you want to check out the order flow tools, which I'm using like Addis and the Bookmap livestream, those are also linked in the description down below. Addis, one of our channel partners, has lots of free accessibility, so definitely recommend you guys to check it out. You probably could get your, you could probably test if order flow works nicely with your strategy, like starting right away. So definitely recommend it. But as always, do your own research. Don't make any purchases without doing your own research. And yeah, I mean, that's all I have here for today. Hopefully see you guys later today evening for that weekly analysis, and tomorrow for that pre-week analysis segment episode. So I hope to see you guys then. Goodbye.